don't want to kick this financial webinar for insurance agents off without recording this for posterity and everyone who is running a little bit late, because I know we had almost 200 people register, just starting to pick up. It's 7 o'clock on a Wednesday evening. I know, like school just got started, probably finishing that last little bit of a shopping list for like the kids and all that good stuff. So we'll give people a little bit of time. But in your now going on 14 years in this industry, and we've talked about this a lot, like people could say, well, what keeps people from really being successful in this industry? Because I've known a lot of people who have made a lot of money selling insurance, but still end up leaving the industry. You run 8% Nation, 8% Conference, and there's a reason for that 8% number, and it's due to the fact that typically within 9 months, about 92% of people who start in this industry end up exiting, right?
Crazy.
So there are things that we can look at. People say, well, they do that, it's because of leads, or it's because of carriers, or it's because of sales training. I would argue that it's because of what we're going to be talking about today. Not being able to actually manage their finances as they start a business, because they've never run their own business before. Like they've been W-2 employees for whatever period of time, and then they want to switch over to start selling life insurance, or maybe they've been in life insurance, but more on the captive side, and they want to go independent, or, they've been doing independent for a while, and it's been kind of sort of making it, but they get to that point where they're just like, man, is the juice worth the squeeze? And if they got to that place where they were actually able to say, okay, everything that comes in, and here's one of the big takeaways, that you go ahead and write this one down. Everything that comes into my business as a licensed insurance agent is not my income, right? Like I have a business that I have to run, a business that also needs cash flow to help it grow and to continue to thrive and prosper. So I would love it if you just kind of help us kick this off. What has been your experience? You've talked to probably at this point in time, definitely tens of thousands. I don't know if you've like specifically talked to hundreds of thousands yet, but you're well on your way. But you've talked to a lot of life insurance agents. You've seen them at a lot of different stages in their career. How important is understanding the concepts of business finance, the nomenclature, the words that are used when we're talking about finance? How important is that to, number one, a business owner in general, but definitely to a independent life insurance agent as they're either getting started in this journey or trying to make this journey actually work, so that they can be in that 8% part of the population that is actually making this thing successful?
Absolutely, buddy. Appreciate you having me on. I love working with Edward Pritchett. What an amazing dude. Also, getting to know Tom Moore. Good to see you, buddy. Appreciate you guys having me on for a couple of minutes. This is an insanely important topic. We're never taught this. I was never taught this. Also, I'm joining you from my office here in Springfield, Missouri. I would love for you guys to jump in chat and let us know where you are joining from as well, so we can see you. As I think about this topic, when Edward first released this topic tonight, that Tom and Edward were doing this, I was like so excited about this, simply because over the years, and yeah, we've talked to a lot of agents, but I've never talked to them about this actual topic. Now, I think Edward and Tom are more qualified to talk about this topic than Cody Askins, by the way, right? For the record. However, the topic is so important because do we go through grade school and elementary and it's been so long, I don't even remember, high school and college and all the things, right? And dude, I was taught none of this in high school. I mean, I was at a Christian school working out of paces, grading my own work at sitting in a cube all day. I had to ask if I could even go pee, I did not learn this kind of stuff. In college, I learned a little. However, nothing replaces getting into business. And you mentioned a good point a second ago. You said, hey, just because all the money comes into your business bank account doesn't mean it's all yours, which I think you're going to have to break it down tonight, because people are going to be like, well, it's my business. It's coming in. It's got to be mine. Well, to run a business, there's a lot more to it, right? There's a lot more expenses along with it. I wish I would have, and I still am not an expert in this topic. I'm learning. I still, a lot of months, spend more than I make. That's not typically how you're supposed to run a business, just for the record, right? That's why this is so freaking important. I'm excited for this because as an agent, your goal is to become an agency. Well, as an agent, you've got to succeed from a financial standpoint and prove that you can be successful so that you can create a blueprint to help other people so that you can become an agency. And then when you become an agency, there ends up with all these other things happening behind the scenes from a finance standpoint. And so the topic tonight is bulletproof finances from an agency owner standpoint. Um, I love it because we are never taught this. It's something we need to know. And if you are out there watching right now and you're thinking, bro, I don't have a clue how to run the financial statement and pieces of my business, then I would love for you to throw a me in chat. Because I guarantee you, every single agent is on here because they were not taught this, but they're like, Edward and Tom are the dudes to do it. And I'm excited to learn from them. And so I'm going to be hanging out and tuning in because I promise you, I got a long way to go. Make sure you're paying attention, taking some notes. Huge thanks to Edward and Tom for letting me jump on and kick it off for a quick second. Amazing topic and excited for tonight's webinar.
And thank you for that just frankness and honesty there, because I learned from Tom, right? Like this is why if you don't know something, go out and hire someone who has the degrees and the letters beside their name that say they understand and know what accounting actually is, so that when I say, hey, can we do this, or does this make sense, or I have someone who actually knows, right? And as I get a chance to learn from him on what he knows and how he's viewing it, kind of from that, almost from that outside standpoint, it allows me to really be able to dive in and say, okay, if I do it this way, this is how I can make sure that my business isn't just a business for the short term, but it's actual a business for the long term. So I'm going to go ahead and jump in and definitely, as we go through this, use that chat. We're going to ask some questions and get some feedback, but it's great to see. I mean, we got people here from Idaho, from Missouri. We got Maryland in the house, Michigan, Denver, Colorado, which we're going to be in Denver for our national conference here very soon. So really excited to get out to Denver in September. I hear it's absolutely gorgeous in September. So excited for that. Hold the snow though. We don't need any snow while we're there. Just like, I know it gets there early sometimes. We just want to get in and be able to actually get back home. South Carolina, like I said, I'm coming to you from very rainy, wet Puerto Rico right now. We had Hurricane Ernesto just left us, but we're still dealing with all the water that it left behind. We have Tom Moore, who I will introduce. Tom has been with our organization for many years now. Part of the Pritchett Agency, he helps to run our Camilla Management Company, which Camilla Management Company is a company that I own that not just manages our insurance agency, but manages our real estate division, manages our construction company. I could add on a couple of other things that we do as well, Tom, our foundation on the nonprofit side. And this is the man right here who makes sure that the finances for that are always moving forward in good and bad times. We still have, I would call them bad. You could just call them rough times, right? Because business, there's ebbs and flows. And Tom, what you've been able to do for our organization since you've joined has been to bring that bit of stability to the overall organization, as we do it. You guys just got a sneak peek. Our marketing manager, Miss Malia Mon, was just kind of popped in there for a second. We have a big team that makes all this work. So just appreciate all of them. But let me go over here real quick to just give a basic outline so that you understand. We're not going to make this a big PowerPoint thing, okay? But I want to give you guys just a quick rundown. And what I would do is as I go through this list, these are the key areas. We're going to go back and try to make this as simple as possible. Go back to the who, what, when, where, how, right? Like we've always heard that, like those are like the key questions. If you understand who, what, when, where, how, then you can make something happen. So that's what we decided to model this after. So I want to break that down, and then we're going to go over to Tom here for a second. I want him to be able to share so that you understand where he's coming from and why he has the expertise to speak on this. What what training does he have? Like, how long has he been doing this? Like, is this just some guy that Edward found on the street yesterday and said, hey, can you say these couple of things? I want everyone to understand that, like, this gentleman has been meshed in the finances of not only insurance companies, but in financial companies that do lending, both to, on the mortgage side, personal finance side. And he's just been a student of business and personal finances during his entire career. This is the guy who, like, when his dad needs advice about finances, his dad calls him, right? And so, when someone's own parents are calling them for financial advice, you might have somebody that might be able to teach you a couple of things. So let me break down what we're going to be going over. We won't hold you guys long. This is the 101 of business finance, okay? We're gonna come, like, if we try to pack everything into a 1 hour webinar, like, it's just not possible, right? This is something that you have to develop, that you have to train over time. As I said, when Cody, and if I didn't give you as much, it's kind of, we all just jumped in and got started, but many of you know who Cody Askins is, and if you don't, go ahead, just hit that Google, you'll find out. But not only a successful life insurance agent during his time as an agent, I want to say, if my memory serves me correct, over 140,000 in his first year as a life insurance agent when he first got started, and now runs the pinnacle of insurance training for insurance, especially independent insurance agents in this country. 8% Nation does amazing things for insurance agents. They have a road show that's going on right now. They have their national conference, 8% Nation conference, which just took place in Springfield, Missouri last month. In addition to that, through his Kaboom leads, like, if you're looking for a great lead source, someone who could make sure that you have, whether it's general life, recruiting leads, final expense, Medicare, like, the list goes on. He uses his knowledge for marketing in our space to help enable agents do exactly what we're trying to do. And that's be able to help our clients, so that by helping our clients, we start making an income that leads to us being able to have a long-term successful business. And what we're going to be talking about today is, how do you manage that cash flow? Because that's what it's all about, right, Tom? It's managing cash flow so that you can always keep your business growing, right? Because a stagnant business is a business that's on the way out. If you're declining, obviously, if I don't turn things around, I'm on my way out. So we want a business that is able to, year over year, find growth, or at least at a minimum, if you're not seeing that growth, if you're in one of those places where, Edward, we didn't have growth last year, are you saying I'm on my way out? Well, you are, if you don't make a change, right? Like, you don't have to be on your way out of this industry, but if you don't change the things that have gotten you to where you are, then you're going to stay where you are or decline. And that's what all of the webinars that we've been doing in this entire series, we started with operations, we're hitting on finance, we're going to be talking about marketing, we're going to be talking about process and systems. So be on the lookout. These are coming out about once a quarter, that we're taking the time, and I appreciate this time. Time works for us. Typically it's 9 to 5, right? By 5 o'clock, you're off, you're with your wife, y'all are doing what you want to do, you're living your life, but you're taking time out of your personal time to share, because the overall mission that we have here at the Pritchett Agency. It's one that Cody Askin shares, and we want to see insurance agents really make the difference that they can make. And you can only do that if you're in business. And you can only do that very successfully if you're in business and that business is doing well for you. I don't want someone who is broke and busted trying to help me plan for my, legacy or my retirement or something. Like, that's not who I want to go to. I want to go to the person who, they have their stuff together, because if you have yours together, then you're going to be able to help your clients have that confidence in you to entrust you with the protection of their family, right? The protection of their retirement. So let me get right into it, because I don't want to take too much more time on that. Let's take a look here at what we are going to be covering today. All right. Gotta love Zoom with with one screen. I don't know how people do it without the dual screens, but we'll make it work, right? All right, let me share my screen here and pop this slideshow up. And Tom, if you can just give me a little thumbs up once the slideshow is showing. Are we good to go there?
I can see it.
All right, as long as you can see it, I'm hoping that means everybody else can see it. So this is what we're going to be covering. Okay, this is the setup. Okay, building it bulletproof. This is building your business bulletproof. Finances is key. We talked about operations first. Operations is vitally important. If you don't have anything to do, you don't have a business in the first place. But very close second, probably almost tied, is how you're managing your finances. And I will say this, because we are going to be talking about financial matters and legal stuff. There is that little disclaimer there. We're not giving you this as like your CPA or your legal advisor. Okay, this is for educational purposes. You do need to check back with your financial professional, your attorney. We're going to be talking, hopefully we're going to get to this here soon. We're going to be talking about LLCs versus S. We have our opinion, and that's what we're sharing here, and what we have seen really work for us over the past 14 years now. But please make sure that you're getting that one-on-one advice from a professional, okay? This can help get you started, but definitely we would advise. This is why Tom works for the Pritchett Agency and Camillo Management, is because I'm not a professional. He's gone to school for this. He's, on the way to being a certified financial planner, having the CPA and like all that stuff. He has those. He's not yours though. He doesn't work for you. So this is still just his opinion. We definitely want you to go back and validate this with the person who's looking at your finances. And hopefully, if you don't have one, after we talk about this, you will get it. So like I said, we're going to talk about number one, why even start? Why look at your finances? And we're going to break that down. What is it? We have this one here, profit and loss. People have heard of that. Balance sheet. People have heard of that. We probably won't get to EBITDA today, but what are these words that your accountant or your CPA are talking about, and how can you be prepared to have those conversations with them? When do you get started? When are some key times in your business that you need to be making transitions or doing something a little bit different? Who's the team? Who do you need to work with? How do you go about implementing this into your day-to-day operations? And then, after we do that, depending on our time, we have a couple extra things there at the end that we'll come back to, but we'll talk about some of the structural things that we need to take a look at when we're considering our businesses. So with that, Tom, I wanted to turn it over to you here for just a second. Share with them just real briefly a little bit of it, so that they know, okay, I'm talking to someone who gets this. What are a couple of the things that you've done in your career in finance that gives you the ability to help a company like the Pritchett Agency, which we probably bring in revenue of about 3 million, a little over 3 million when you total up everything that's happening across all the businesses right now. What gives you the ability to help us grow and go from where we're looking at 3 million now, and we're looking 2 years down the road saying, okay, what's it going to look like when we cross the 7 to 10 million mark?
Well, when I started thinking about this, how long have I actually been doing accounting? I used to tutor this in college, which would have been 1991. So we're looking at about 33 years of accounting experience, give or take, in there. And I was in personal finance, doing loans, mortgages, and things of that nature for well over a decade. I think I was in that between 12, 13 years doing that industry. And I just recently finished my finance degree and I'm going to be sitting for the certified financial planner exam here probably in November.
All right. So, and you guys got to hear that, like over 30 years of this being a part of what you do with in your day-to-day, starting off in that where I think everybody needs to start with is like, do you have someone who understands math well enough to just keep your books, right? Because when you first get started, that's where it begins. But you've taken that, and as you've gone through your career, you've continued to advance it. You know, staying plugged in, staying in school. Like I love someone who knows that, okay, just because I got a degree in college 10, 15, 20 years ago, that doesn't mean my education is over. And, you know, even while working here, you've been actively engaged in, okay, let me take some additional courses. You know, I want to get this CFP knocked out and under my belt. You know, adding those additional designations behind your name, not just to add the designations, but to show and to actually learn, you know, what are the things that I can do to grow my level of knowledge so that I can operate and help, whether it's a company like ours, or as I said, I know we were talking the other day about you kind of giving your father some advice about his finances and some of the things that he could do to maximize his retirement. So let's get started with that why. Why track your finances? You know, and I'll start this off with, if you haven't read the book Business Made Simple by Donald Miller, it's a fantastic kind of micro MBA course, okay, to give you some of the basics about finances and leadership and marketing. And one of the things that he says when it comes to why track your finances, if it's not already kind of clear and obvious, if you don't track it, you can't improve it. Okay. And that author was Donald Miller, Business Made Simple. But if you don't track your finances, like this is where people get in trouble, right? You know, tax time comes up and they say, uh-oh, you know, my accountant wants XYZ, what do I do? And they've never sat down and said, okay, what were my expenses and what was the income that I actually brought in? And how can I justify why I spent this on my business so that whenever I tell the IRS, they're like, yeah, that sounds good. Here's your tax bill, or here's your, we're 1099. We don't get that many refunds these days, but at least I can lower that tax bill down. But Tom, coming from someone who's been in finance for over 30 years and helping business owners to track their finances, you've seen the good, you've seen the not so good tracking of finances. What would be your response to, you know, whether it's they're a brand new agent starting out on the independent 1099 track, or they've been doing this for a while and they just haven't really been tracking it? They just kind of cobble it together when those times come and say, okay, accountant, here you go, file my taxes. Or they just get on TurboTax and just type in stuff and say, well, I'm too small for the IRS to worry about it. They're not gonna fact check this stuff. We'll just send that up and hope for the best, right? Why do you see it as so important to actually spend some time getting things together, working on your finances, whether that's, you know, once a week, every other week, you know, it depends on how many transactions that you have going on, but why should they be concerned about tracking their finances?
Well, I think Cody also hit on a good point earlier where a lot of people don't know this, but it's the simplest thing, whether you're actually involving your personal life or your business life. You first and foremost have to have a budget. A lot of people are just, buying cover, and you really have to be able to track this stuff, because if you can't measure it, you can't tell how well you're doing over a course of time. So if you're not tracking your expenses, whenever your accountant gets your tax information. I worked for a CPA once that charged $270 an hour. So you're saving yourself a lot of money by not paying that man any longer than you have to, because it can really get expensive. So,
Yeah.
and yeah, you really have to look at it in the term of, okay, first and foremost, I've got to be making more than what I am sending out of here. And where am I putting my money, and how is it helping me make more money? Or how am I reinvesting back into my business? Because it is a big jump coming from a W-2 standpoint into, okay, now I'm a business owner and I'm a 1099. And you also have to remember you're not really getting taxes taken out during the course of the year as a 1099. So you also have to plan for that. So it's another item that goes back into your budget, as well as the cost of doing business, as you said. If you
And
if you were at Nike, for example, they have to have certain materials like rubber, leather, things like that in order to make a tennis shoe. So the same thing is going to be true with your business. There are certain things you're going to need. You're going to need to have either an office set up, you're going to have overhead, whether it's gas or vehicle, driving to a client's house, buying leads to reinvest in your pool of business.
it'd be interesting to see, I mean, of the folks that we have here as attendees on this webinar, I'm interested. This is just a quick straw poll. Put a 1 in the chat if you're currently tracking your business cash flow. And what I mean by that, you know what the in is and you know what the out is. Like you have that, whether it's a spreadsheet, QuickBooks, or whatever. I'm just wanting to see, right? And this isn't for those of you who aren't doing that. What I want you to understand is everyone who does put a 1 in, like they started at some point in time, right? Like it's not like they just fell into it and like I'm already tracking my stuff. Like, there's a point in time when they said, okay, I need to start tracking this information. So I believe that you guys get it. Like you wouldn't be on this webinar if you didn't think, well, yeah, it would be important for me to start tracking this. So what is tracking, Edward? Like what do you mean by tracking? And I don't know, Tom, if you have that P&L and you're able to share that. But what we wanted to do is take a look. Like this is an actual profit and loss statement from the Pritchett Agency. This is circa what, 2015
June of
that we're looking at?
2015.
January of 2015. So this is the actual numbers that our company had for its profit and loss in June of 2015. Okay. And now we want to show you this because tracking is very straightforward and simple. It really is. Now, we did this, we use a software called QuickBooks. There are tons of accounting softwares. This is where we're saying, talk with whoever's your CPA, whoever helps you, hopefully someone is, helps you file your taxes. If you're using TurboTax, then maybe for you right now, it's just going to be a spreadsheet. Okay. But all tracking has to be is just think of in and out. There's cash that comes into your business. This is usually from insurance carriers, right? Maybe your IMO pays you out bonuses. Those are typically the only two, right? Like there may be some other things that you're doing. You have some other, maybe a side hustle or something like that. But like typically for us, it's insurance carriers, our IMO, right? Maybe if you're to the size where you have an agency and you're putting on conferences or meetings that you're charging for, then that would be income coming in as well. And then on the other side of that spreadsheet, you have your expenses. So that's the simplest way to think about this. And what that ultimately leads to is that's going to lead to what you're seeing here, which is a profit and loss. And Tom, if you'll start there at the top, I just wanted to kind of talk through this. And again, this is going back to this 2000. So this is 9 years ago. Okay.
So this would have been,
so
you were what, 4 years into your business?
4 years. So I started the Pritchett Agency in 2000 and October of 2010. So this is just about almost 5, right? This is 4 and 8 months or whatever that would be. All right. So we start off there at the top. And that's why the simplest is typically going to be the income, like what's coming in to your business. Unfortunately, our income lines are usually smaller than our expenses, right? Because we have these categorized. Now, we're able to actually break down commission income now. Like at the time, we didn't do this, but now we can go in and Tom can show you which carrier paid us what, right? What income we had coming from IMOs, what income that we had coming from other types of sales. And so for us at the time, when you see that sales income, this was during a time where we actually, encouraged people to come to certain meetings and conferences where we would pre-buy tickets and we would sell them tickets to come to the conference. Now, you'll also see there's an expense that we have for those conferences. So this wasn't a revenue source. Our revenue source is that first line, commission income. That's where we're actually seeing revenue. Our sales income is just going to be, it's a wash for us. But I want to track it because the IRS cares about that. And I care about it to say, what's the return on that investment whenever we take a look at that later on. So look, as we scroll down here, we see, again, that those first two lines, that's what's coming in. We have that total amount, $39,184 for that month of June. And it's interesting that was that long ago. And this is what this industry can do. Sometimes I look at numbers like this and it's like, that's pretty cool that 4 years into the industry, you can have a business that's bringing, multiply that out by 12. 40 times 12 that's almost a $500,000 business a year in revenue. Again, because of this industry, which is kind of crazy. But that aside, now you start getting down to the outflow. And this is where it's so important to track, right? It's so important to track because it's this, what's the old adage, Tom? Like it's the little foxes that spoil the vine. It's usually nothing huge and major, but if I don't know, like, where is my money going, then I'm not in control, right? The money's in control or somebody else is in control that's just siphoning off money from me. So at the time, you can see there's that administration budget, office supplies, postage, delivery.
Also known as what some people call it your overhead. And I also wanted to point out something. If you see this where it says gross profit, that basically means that's what income we took in, what revenue we took in before any expenses. So if you're talking to your CPA or financial advisor, you're going to hear gross and net a bit. Net will be after expenses have been taken out. So that's your final total. That's the good total.
Yep. So gross profit, that's everything that's coming in. Net profit is what you get, and we'll get to that here in a second as we go down through this. That's what you actually get to take home. That's what Uncle Sam is going to take their piece out of, right? At the end of the day. So, we have these things broken down, administration budget, the more I like being granular, right? Some people just want to create these large buckets and say, well, all of this is this expense. Well, if I don't know some of the particulars, like what was that spent on, how do I know, is that helping my business or hurting my business? Should I continue to spend on that or should I not? Our lead expense at that time, this is for my personal production. We don't pay for leads for our agents. Our agents purchase their own leads. So that lead expense, $2,300, that's what I spent on my leads that month. And I have to look back, did I get a return on that investment? Keep on going down, you see the events and conference budget. So that's where, like I said, we had that sales. So scroll back up just a touch, Tom. For conferences, we sold, what was that? 3,000, a little bit higher there, $3,925 in conference ticket sales. But what we spent to get to conference, to purchase those tickets was right at $5,000. So I have to say, is that extra $1,100, right? Or $1,075, was that worth that expense that I didn't recoup to get myself and a good majority of my team to that conference? We can keep on going down. We got, this was back when I was in the field, I was driving a vehicle. So I have my automobile expense in there. That was the company car. So, the IRS allows me to deduct that because you can either do your mileage or your car expense. My accountant at the time said, hey, do the car expense. I think that's going to make more sense for you. And as you scroll down, this is one that I want to highlight. Highlight that rent expense, Tom. We were laughing about this when we were looking at this P&L statement. So, 4 years into the business, for whatever reason, I had a rent expense for my office of $7,428 a month. This is where you get to start saying, am I making the right decision in what I'm spending my money on? We did the calculation. Well, it was like 20% of our gross went towards rent
Yeah.
whenever we did the calculation. So this helps you catch those things, right? If I didn't have this broken down into these categories, I wouldn't be able to say, is there any way that we can lower that rent expense? Do we need to leave this office? Do I need to sublet this office? So those are some things that by having your income and your expenses and having it broken out like this, you can really start to see. You can see our payroll. And when you guys see the deleted little moniker over there on the left-hand side beside the names, this is from 2015. QuickBooks, which we use, has updated some of these categories. So these categories don't exist in the same name format in QuickBooks anymore, and that's where you're seeing that parentheses deleted. I wish we could have deleted these from our expenses, but that's not what's happening there. But just want to note that. So you can see we got payrolls in there. Keep on scrolling down. There's an insurance expense. Keep on moving on down through it. But this gives you an idea of, again, how granular you want to try to be, right? And if you need someone if you're not really good at tracking in this way at bookkeeping, that's where, and we'll get to this in the who, you may want to ask or look for someone like part of that payroll expense, because even at this time, I had a bookkeeper and all their job was they worked, I think it was 4 or 5 hours a week, and their job was just to go into the bank account and input what happened for that week into QuickBooks so that we could have these kind of reports at the end of the month. But then at the end of the day, it gets down to that point where you have, okay, what's the net income? All those expenses that my business paid out for that particular month, minus that gross profit that you saw there at the top, leaves me with a net income for the month of $18,084. And now I get to make some other decisions, right? It's, as I said earlier, is all that my paycheck? Or is some of that what I'm paying myself? And is some of that what has to stay with my business? And this is where we'll go over to the cash flow statement, Tom, where what we then take, after we clean it all up and take a look at everything, we have that net income, and then what am I paying out? So if you look, so the net income, and this was after it was all finalized and finished. So the initial P&L, there were still a couple of things that had to come out of that gross at the end of the day. There's that accounts receivables line. There's a self-help credit union loan that was being paid on at that point in time. And I had my company was paying those things. And then ultimately it comes down to what's my clean number? What's the net cash that I have to operate off of after that? And you can see in that line where it says distributions E Pritchett, $9,730. That was my income at that point in time. And then that left me with how much cash do I still have for my business just in the bank? Just like what's coming up, like the business is going to have expenses in the month of July. So I need to make sure that based off what's in the bank account, what's left over after I pay myself, that my business has operating capital. Donald Miller calls it, that's the fuel. That cash flow that's left over after everything is said and done, that's the fuel. There's also another thing that we have to think about here too, is this is where I got to think about taxes, right, Tom? So like, even of that $9,730 that I paid myself, some of that still is going to go to the IRS, and even some of that cash that stays with the business, if it doesn't get spent later on actual expenses that the IRS allows them to write off, there's going to be some taxes paid on that. So this is what we wanted to show, and you can stop the share on that. Hopefully everybody gets it, understands. At least you're seeing, okay, this is where I'm wanting to go. If I'm talking with an interviewing and a bookkeeper or an accountant, I want to ask them, hey, do you know how to help me prepare a profit and loss statement? Would you be able to help me prepare a cash flow statement so I can see where my business is at the end of the month? You don't have to hire a full-time person for this stuff. And we'll talk about that a little bit more in the who. But if this is like, Edward, you're already over my head. Like I can't do all this. Okay, start off with that spreadsheet. What comes in, what goes out, and then look for those people who maybe it's a couple of hours a week, right? Like there's so many Fiverr, right? Or like any of these, a bookkeeper who has multiple clients, right? Talk with your mentors. Hey, do you have a bookkeeper that does your books, and do they have 2 hours a week to do mine? Or maybe it only would take an hour a week. But now you can have that intelligent conversation with them to see, hey, this is what I'm looking for, so I can just understand what my business is. Tom, for you, when it comes to the what, like we've explained the basics of it, but what's kind of the most important thing that you relay, to me about like here's what we're trying to do and what I need in order to help you do this, right? What kind of questions should they be asking someone who, and we'll talk about a little more in the who, but that they can be thinking about so that they can get themselves prepared to adequately start this tracking that we're discussing.
Well, one of the things I'd like to point out is we have got it this granular because we've been in business for 5 years at this point. When you're first starting out, you're not going to be quite this detailed because you're not really going to have the same type of expenses. But getting to know just the ins and outs, you don't have to know the details, but just knowing basically income minus expenses, equals my net profit. That's going to help you whether you're doing it on a spreadsheet, whether you're doing the old envelope style where you're putting money aside for your bills and stuff like that, like some of our grandparents did. And you're going to want to keep an eye on some of these things. As you get more involved in it, you'll start getting to where you're breaking them out a little bit more. Like, for example, the marketing department with the Pritchett Agency, we have that broken down into a lot of parts now versus what we had here because social media is a bigger thing now. We've got a lot more things out there with different platforms, and we can see where we're spending money with each one, the way that I break it down each month. So you can kind of see what's giving you a return on what money you're spending. The statement of cash flows is also another really important item there because that's actually your money going in and out. That's going to show how liquid your business is, just to be able to cover whatever bills that you happen to have. You don't have to plan ahead too much because you've got the finances there. Another thing to throw in there for reports, most CPAs or bookkeepers are going to present a balance sheet to you. And what that's going to be is your assets, that's your cash, your bank accounts, what liabilities, the people that you owe for long terms, like any loans you might have taken out, and your owner's equity is going to be in there. So those three statements will give you the health of your business. And it helps to know that just so whenever you do decide to let someone else start working in your books, you can still kind of oversee and know what's going on in your business.
Yeah. And one thing that you mentioned when you were talking about cash flow is like having the money in the bank allows you to stay away from becoming a borrower. And I'll definitely admit right here, I'm in real estate. I've become a borrower to build up what we do on the real estate side, and even to help like, okay, I want to do this thing, but we don't have the cash on hand right now. We have the credit, we have the show of cash flow, and we're able to get some decent terms on some lending. At least definitely 2 years ago, 3 years ago. Now there's no good terms on lending. Please don't borrow. Like it's just interest rates. No, just wait till at least after September. Maybe something's gonna happen with the Fed and they'll come down these 50 basis points that they're talking about. But that's again, now we're getting into 301 and 401 finance. But
Leveraging is a whole different thing,
yeah, that's a whole other one. But what the cash flow statement will do is allow you to stay in a good position so you don't find yourself in a tight spot where you have to make decisions. You have to try to leverage your business because in the early days, if you can do it on an all cash basis, and we stayed all cash for, I mean, that self-help credit union, that was actually a vehicle loan, right? Like that was something I had, unfortunately, before I even got into the business, and we were just able to start paying it back. But it allows you to know, here's what I have, here's what I can spend, here's what I can invest in the coming months without having to go out and get one of these days, 8, 9, 10, 12, 15% loan. People will lend you money, right? But what that can do is really put your business in a very tough spot Because if you can't make those, like, you will ruin yourself and your business if you can't make that payment. We all know that, right? So by knowing and doing this tracking that we're talking about, it helps you stay ahead. You can make those decisions like, can we afford to invest in that, or do we need to wait another month or two? All right. So that's one of the, by having this information, it's really going to allow you to kind of stay ahead of that curve. Now, let's talk about the when. And I'm going to turn this to you, Tom. Like, we've already said, when do you start doing this tracking? Well, as soon as you can, right? Like, as soon as possible. As Tom just said, you don't have to be as granular as what we just showed you from the 5-year mark in the business. You don't have to be that granular in year one, but you have to start with something. But what are some key dates, and especially when it comes to taxes? What are some sort of key things that people need to be thinking about when it comes to reviewing what's happening cash flow wise, so that they can be prepared for taxes? Because that's another one of the things outside of borrowing money when you really can afford to borrow. There's a time where you can afford to borrow, and there's times where you can't. But there's the other thing that I see really hurt people when they're starting a business is taxes. Because if you've been W-2 and your taxes have just always been withheld, getting to that place where I'm setting money aside to pay taxes when taxes come. You know, I've seen a lot of agents come to me at, April 15th, Tom, and they're just like, hey, I just got this tax bill for $22,000. I got $750 in the bank account. What should I do? Like, well, you should go back a year and start setting money aside so that you have the 22,000. But obviously, you can't do that. So, what are some things, and what is that? This is a good time, I think, to bring up that ideal of the quarterly business cycle, and quarterly reviews of where your finances are, because that can help you stay ahead of the curve as far as timing when it comes to tracking your finances. What are your thoughts there that people should be thinking about and paying attention and making some notes that, okay, here's some key dates that I want to keep in mind?
Absolutely. On quarterly, I have had times where I was W-2. Of course, I'm W-2 now, and the taxes are not something you have to worry about. And you look forward to tax time because more than likely you might get a little bit of money back. But whenever you become a 1099 employee, yeah, you're having to keep track of your own taxes, and you're really having to guesstimate them for the most part, a certain percentage. And it's usually going to be, for most people, somewhere between 23 and 33%, give or take. And of course, you're also going to have some items that you can get tax credits on and things of that nature. But I always paid in a certain amount I would set aside a certain goal, usually right around 30 to 33% for myself that I paid in every quarter. So whenever the time comes at April 15th, you don't have this massive bill. You've paid some of it down already, or in some cases, it's time to get a refund again, which we're all excited about whenever we get the money that actually belonged to us at the beginning. So it's always a wonderful thing. So if you track your stuff monthly and you're keeping track of your expenses for the most part, but then you're doing a more detailed quarterly report. So that way you're not looking at 3 months that you're having to put together all at once. If you just do it as you go, just put things on that spreadsheet or enter things into that QuickBooks program. You can actually get the accountant's QuickBooks program for free, and it allows you to set up your own business inside of that. I actually have that, and that's how I'm able to go in between all the different businesses for the Pritchett Agency, so that I don't have to keep signing into each and every one every time I want to do something. I can just go back and forth. So if you're tracking your expenses just as you go, or even at the end of the night, like, okay, I spent this much on gas, or I spent this much on, my oil change for the vehicle. Just if you're keeping track of it as you go, it won't be as daunting a task at the end of the quarter, and certainly not at the end of the year whenever it's time to do that. So as you do it in increments, it's going to be much easier on you. But I recommend,
Yeah.
if you can, pay it quarterly. That way you are not spending the money. And another option is, if you know how much roughly you're going to have set aside for taxes, you can even do things where you're investing. Okay, like I've made $10,000, but I know I'm going to spend $3,000 in taxes. You can take that $3,000 and you can put it in some type of vehicle like a CD, for example, where you can't touch it. It's saved, but you have it at the end of the year, and you've also made a little bit of interest off of that as well.
Yeah, and I mean, we're in insurance. Another thing that this is, again, I'm giving you like some teasers for the 201, 301, 401 classes that we'll do in the future. But this is where we as insurance agents, I had to make this call just yesterday, called up Foresters, who has one of my participating whole life policies, said, hey, how much do I have left to be able to put into my my participating whole life policy? And they were like, okay, you can put an additional $68,000 into the cash value or the paid up additions rider of your policy. And so this is one of those places where if I know how much I'm going to need to be paying in taxes, I can take that amount, put it into that account, and now it's in there, it's locked away, but I have access to it. And it's going to be earning me an interest in there. CDs are great too. That's another option. It's in there. When tax time comes, I can go and borrow for myself, pay my taxes off, and then over time start paying that back. Right. So it's like, again, how can I make my money work more effectively and efficiently for me? And if I know what those numbers are supposed to be, and I know where my cash flow is and how stuff comes in and out, then I can pay it there. And this is, again, teasing out some of like the really advanced stuff. Guess who owns my life insurance policy? Tom, I mean, you know who owns my life insurance policy. My company owns my life insurance policy. So my company can make contributions to my life insurance policy on my behalf. And Tom, let me ask you this, is my company paying for my life insurance policy that it's a beneficiary of? Is that an expense for the company, or is that just giving money to me?
Yeah, it's not quite that cut and dry, but it's certainly.
Well, that's what I said. Like I'm teasing out those like the 301 and the 401. So no, it's not 100% an expense, but like again, there are when you're tracking and you're working with professionals, there's a lot more. Like people are like, how do certain business owners get away with paying so little in taxes? Well, if they're tracking it and they're working with professionals, they're able to see I mean, the tax code is like this huge book, right? That gets bigger and bigger all the time. And it has various, I don't even want to call them loopholes. It's the tax code. And you use the tax code to your advantage if you're actually tracking your finances and working with a professional. Now, I know we're starting to get short on time. We'll probably run just a little bit over what we were thinking time-wise, but let's hit on these last two. So we got the why, we got the what, and the when. I think those are kind of the three most important. We've already talked about the who. We've already talked about the who a little bit. It starts off with, I just need a bookkeeper. I need someone who can help make sure that consistently, because I know you're going to say that you're going to do it. and you may for the first month, okay? Because I know you're also running your insurance agency. You're also meeting with clients. There's 25 different things that are pulling on your time. So as Tom was saying, if I can find someone who on a simplified basis, they can just input numbers for me, and we can have that monthly meeting where we can say, here's the P&L, here's my cash flow statement, here's my balance sheet. Do you understand it? Any questions? All good? Great. And that might take somebody, right, Tom, for a new agent, someone just get started, a couple of hours a week, if that.
Yeah,
right?
if
Like
that.
once you get a system going, it can be very, very quick for someone to do that. So look for those people who are bookkeepers, and they advertise for this. They're just Google it, your area bookkeeper. They have multiple clients. Talk with maybe your mentor or someone who is in the organization that you're in. If they're local to you, they may already have someone who could take on another client, right? And this way, whenever I do go to my external CPA, your bookkeeper is not your CPA. CPA certified professional accountant. Is that that's
Certified public.
public? That's why I have time on this call, guys. I don't know all these definitions. But I have a certified public accountant that, there's licensure involved in that, right, Tom? They're certified by there's some, just like we're certified to sell life insurance. Yeah, we're certified to sell life insurance. We have a license. They have a license to do this. That's the only way they can put those letters beside their name. And now I can take what my bookkeeper has been working on for me, hand that to a CPA. And Tom, do CPAs love getting nice, clean, good, easy to read books?
Well, they love it unless they're worrying about what vacation they're going to take and how much they can bill you. But yeah, they love to get the organized stuff.
Yeah. So now if your CPA is like, oh no, I don't want you to use a bookkeeper. I want you to do it yourself and just, turn in a box of receipts to me. Okay, that's someone who's trying to make a really good buck off for you, and you probably don't want to use them as your CPA. But if you have a CPA who they know about the insurance industry, right? These are some questions I'm going to ask my CPA. Hey, do you do taxes for other insurance agents or other agencies, independent agents, so that they understand a little bit at least about your industry and your business? And then, how would you like me to get my bookkeeper reports to you? Do you want that quarterly? Do you want that monthly? Right? Most of them will be happy to take it quarterly, because if they do it quarterly, then you can do what Tom was talking about and get an estimate of what should I pay each quarter to the IRS, so that I don't have a big a big tax bill come April 15th, right? And so you go from I have my internal bookkeeper, I have an external CPA, and then I can start to move to where, as my business grows and we start having a lot more transactions happening, and my bookkeeper's like, hey, it's going from an hour a week to I need to spend 2 to 3 hours on your stuff. Now you may start thinking, let me start setting some money aside so that I can get my own internal bookkeeper slash finance manager, right? And then you start to get to the point where you need your own, and this is right what we're working on, Tom. Like, you need someone who has those letters behind their name, CFP, CPA, and all the other letters that you guys are able to get, being accountants and financial planners. And that's what then allows you to level up your business over time. So that who is really, I got to have someone who's helped me, and it may be just an hour a week. Yeah, it doesn't have to cost you a lot, but I promise you, if you're spending $200 on a bookkeeper a month, that's going to save you a lot of time, energy, a lot more time, energy, and money than $200. Most of us, when you go out and sell one policy, you're making more than $200 selling one policy. So one policy a month, less than one policy a month, to make sure that you can sleep easy at night when it comes to your finances and you know where your stuff is, extremely important. And then the last
opportunity cost, like
opportunity,
opportunity cost.
exactly. Yeah. And then the last one, I'll let you speak on both of these too before we go to the last thing that we'll hit on, as far as a real quick thing on structure, is how. And a lot of this may seem somewhat daunting. You may look at that P&L that we just shared and be like, I can't do that. That's fine. You don't have to start there. As Tom was saying earlier, it's one step at a time. What is the smallest thing that you can do right now to start tracking your finances for your business, right? One of the things that I had to establish very early is, for me, it was percentages. What percent of my commission income is mine, and what percent is my business's, and what percent is Uncle Sam's? I had 3 percentages. And there was a time early on, and Tom, we've been looking to reinstitute this here recently. We get daily pay from these insurance carriers. And I had my personal account. Well, the money flowed into the business account, but then I had my personal account and I had my tax account. And as money came in, that was my tracking. It was, okay, I just got paid $1,000 by Transamerica. All right. 25% needs to go to that tax account. 40% goes to Edward Pritchett's account. And the rest of it stays, 35% stays in the business account, because that's the business's income. That's what helps make sure that the business can continue to run and that we have the ability to actually grow and scale this out. Because guys, I don't know how many times I've had agents, oh, well, I don't have money for leads this week. Why not? You got paid commission last week. What happened to all that? Well, I had to spend it on my personal stuff. All that money wasn't yours. You're stealing from your business whenever you give all that money to yourself. You're not allowing your business to have the fuel that it needs to stay in flight. And so therefore, you end up with a crash landing. So on those 2 points, Tom, as we start to wrap up and get to this last thing that we want to close out with, any other additional comments on like the who that they need to be thinking about when it comes to getting their business finances started and continue to move it forward, and then how they can go about getting that started?
Yeah, and I think we touched on a lot of that. And as your business grows, you're going to start inviting more people into that company at a lot more different levels there. But it's going to start out with yourself, and it helps to really educate yourself a little bit on what's going on with your business and how to really read those statements as well. And a bookkeeper for a beginning fledgling business is not going to spend any more than a couple of hours a week on this. So yeah, like you said, your opportunity cost is, okay, I could be doing all these expenses and keeping track of all this, or I could pay someone else just a little bit of money to do it while I'm out here making more money with that time. Do I want to spend an hour sitting here at my desk going over these receipts, or would I rather be in front of a client? So
Yeah,
absolutely. And as you get more involved and as your business expands and as you become Edward Pritchett, your company gets bigger and bigger, and you have to have more moving parts to it.
yeah. And that's why I really tell people, guys, it's a one step at a time. You don't have to go out and order QuickBooks tomorrow. That's not what we're saying. You can just start with something as simple as a spreadsheet, right? You want to start there. And then even right now, you don't necessarily need, in that first month, do you need a bookkeeper today? Not necessarily. You just need to be tracking it. But that needs to be one of those things where you're just like, man, I'm spending 2, 3 hours going into the bank statement and putting this into this spreadsheet. And I'm not able to create a good P&L at the end of the month. Okay, now let me take some of my earnings, what I'm setting aside for my business, and go out and spend some time interviewing a couple of people that can come in and help me actually track and do proper bookkeeping for my company. So this is the who, what, when, where, how that we wanted to start off with. Like we said, this is basics. But the problem is most people don't even start with the basics, and so therefore they're never able to get to any of those next levels. And this is one of those things that ends up taking them out of the business. Either they run out of money to be able to run their business, can't buy leads, can't put gas in the car, they get hit by crazy taxes that they didn't know about, and then they're in debt to that. You don't want to be in debt to the IRS, I promise you. Like, one, they're going to be able to get their money. They have some deals with the banks. Like, at the end of the day, they can just come right in and take it if they want to. Okay. But these are the things that will help you be able to scale your business and continue to grow and have enough fuel so that you can stay in flight and don't run into those crash situations. This doesn't take out all the ups and downs. There's going to be turbulence, guys. Okay. Even on a fueled airplane, you're going to hit some turbulence from time to time. But this is what's going to allow you to be able to continue to grow your business, to grow it successfully, and to stay in business long term. Now, the last thing that we want to hit on, and we'll do this real quick, like I said, this is number one. We're going to be coming back with more of these. So if you haven't had a chance to either subscribe to our newsletter, we'll throw up a QR code at the end of this, subscribe to our YouTube channel, stay in touch with us via social media. This is where we make these announcements. So if this has been beneficial and helpful to you, we'll have the recording of this ready here relatively soon. We'll put that out to all of you who attended. Share this information. I'm not doing this to just like, yes, I'm doing this to help the agents that are part of my organization, but I don't care who or where you're working. If this helps you help more people with the products that we sell and serve more families, then we're going to get value back from it. I promise you, because we're just making this industry better because of that. So let's go over here to this real quick. Let me share that PowerPoint one more time. And let's talk just real briefly, Tom, about the 3 ways. And this is, again, this is kind of crossing from 101 to 201 if you're thinking, what level am I at? But when you first get started, all of us are 1099. We are what you would call sole proprietors. Okay. So let's pull up this. There we go. Go to this screen so that you have this. All right. So when we first get started, you're a sole proprietor. The IRS sees you and your business as one and the same, right? Any income that you make, they see it as yours. Expenses that you have, you get to write those off. And then you're going to ultimately have taxes at the end of that. In some states, like where I started my business, North Carolina, when you're a sole proprietor, they have this fun little tax called self-employment tax. Okay, you don't work for, you're not working for a company, so they're gonna give you this little extra tax bill at the end of the day. I was a sole proprietor from 2010 until 2013. And the reason I decided to not be a sole proprietor anymore was because my accountant came to me at the end of the 2013 year and said, "Hey, Edward, you have a $14,000 self-employment tax bill this year." I said, "What are you talking about?" He said, "Oh, this is you've gotten to that level now." And I was like, can we not pay that?" And he said, "Well, you could get arrested. They're gonna take it one way or the other, so you should probably pay it." That's when we had to make a decision to incorporate. And the decision was either you could be a LLC or you could be a S or a C corp. Now we chose LLC. And Tom, I want, if you could, in a brief sense, and again, this is our opinion, either one of these corporate entities can work and help make taxes more efficient for you. But when you saw that we had chosen LLC versus doing an S or C corp, you said, "Yep, that's the way you want to go. We don't ever need to worry about changing to an S or a C corp. We'll be an LLC corp until kingdom come," right? Like we're not changing that one. What's your advice to agents about maybe when should they look at switching from being a sole proprietor to an entity, right? Making their business a business entity. And what's your advice? LLC, or I'm sorry, what's your opinion? LLC or S or C corp?
Well, one of the main benefits of becoming an LLC or an SC Corp is also going to be liability. Once you get to a certain size, yeah, you're also paying those self-employment taxes, but it also, sole proprietorship exposes you to any liability. So if the company is at fault for anything, it doesn't really matter what it is, you as a person who owns that company is personally liable. So you could lose your house, you could have assets seized and things of that nature. The LLC, the limited liability corporation, what that does is that creates a barrier between yourself and the actual company. So for example, if I own the company and something goes wrong, doesn't matter what it is, whether someone slips on the floor on my property, they're not coming after my individual house. I'm not going to be homeless because of it. You also do not have to go public as an LLC. There's a lot of benefits to an LLC, and most people in this line of business are probably going to go the LLC route because the taxes on that are going to be basically your taxes at the end of the year based off of what the LLC made. If you have an S corp or C corp, then you're looking at double taxes on that because you get taxed on the income that you made as well as the company gets taxed on that income that they made before they pay you that income that also gets taxed on. So
and let me pause there. If that was quick for you, then just whenever you watch this on the replay, just pause that and replay that a couple of times because and then ask your CPA about that. Like that's one of the things that was explained to me. I was like, wait, explain that again? Oh, okay, one more time. Okay, I got it on the third time. But like that ideal of the potential for double taxation if I go S or C corp. And there was a little trick, Tom, and we learned it and you confirmed it for us. An LLC can elect to be taxed like a S corp without being an S or a C corp, right? So we can get a lot of the benefits of the S or C corp with very few of the extra regulations and rules that are applied to that S and C corp. Plus, we get to avoid that threat of any double taxation.
Yeah, there's stricter rules. You have a lot more outside filings that you have to do, as well as you have to have stockholders. You have to have stockholder meetings. There's a lot more little things you have to do in place. What if you're going to drift up into S and C corp? But LLC, you don't have any of that. You're not going public. You don't have stockholders or shareholders or anything of that nature. There's no requirements for certain meetings every quarter and things of that nature.
Yeah.
So a lot
And
less compliant.
most of us as independent agents, we're not thinking or planning on taking our businesses public. So if that's in your game plan, like you're like, man, Edward, I'm doing an IPO in 5 years. Okay, great. And then, maybe you do need an S or a C corp. So, talk with your accountant and your attorneys and figure out what you need to do. But whenever the time comes and you're getting ready to make that transition, that LLC designation, that's a strong one to be able to start with. So, Tom, as we wrap up, I'll go to this slide. Here is where you can follow us. If you want, you can go ahead and we'll leave this up for a second. You can take a picture of this, scan that QR code, follow us for updates about when the next training around building a bulletproof business is going to be coming in. The next one up that we have is business analytics. I geek out for that kind of stuff. I know most people don't, but just like tracking your finance, if you don't know the analytics for your company and the key metrics, if you're in the social media space these days, you hear about KPIs, key performance indicators, right? So business analytics will be our next webinar that we're going to have coming up sometime later on this fall. And then we're going to start off next year with a webinar on marketing. Our marketing team does an amazing job. We are continuing to learn about how to market in the current environments that we are in. So click on that QR code, go ahead and follow, make sure that you're staying tuned. We're not trying to hit you with a whole bunch of emails and stuff like that. Whenever we're sending stuff out, is honestly, guys, this is just how can we help you grow your business better? How can we share what we've learned over the time that we've been in business, I've been in business, so that you can hopefully glean some things from either mistakes that I've made in the past, things that we've learned, so that you can just be a step ahead. All right. Tom, any final comments as they snap a picture of that QR code and go ahead and get registered? Go ahead and hit the done button on that now, so that we have a lot of stuff that's coming out on our Life Insurance Today channel there on YouTube. We put out tons of stuff on Instagram, TikTok. Feel free, take it, share it, remix it, whatever you want to do. It's intended to help you grow your business. But any final closing thoughts that you might have, Tom, as far as, all right, they're wanting to build a bulletproof business and they're wanting to really lock in on this finance component for their business. What advice would you share based off of the time that you've worked with the Pritchett Agency and your experience working in finance for mortgage companies, finance companies, and insurance agencies and businesses? What would you share with them as they kind of try to tie all this stuff together after this last hour or so worth of information?
It's mostly just to emphasize just how important tracking your money is. Coming in and going out, and also to remember to not be overwhelmed, because you're starting out. It's not going to instantly build be an accounting system with 30 accounts. You're not moving out of your parents' house into something the size that your grandparents own. You're going to have a small apartment, and you're going to work your way up in that size, kind of like you're going to do in your books and your company. So it will be a gradual thing. So it's not going to be this right out of the gate. You're not going to have to do all the things that we currently do after 14, 15 years in business. It's going to be much smaller, and it's best to know it now. That way you ensure that you do become something bigger. Longevity is
I love it, sir. I mean, that's the thing. It's if you take those steps one step at a time, if you're willing to grow into. Too many people, one of my mentors always told me, we live in a microwave society, but it's a crock pot world. And what if for some folks that you might not know what a crock pot is, but like everything, it takes time. Any kind of development, anything that's worthwhile, there's a certain amount of time that has to be put in. We've all seen the people who, got rich overnight. And I didn't say wealthy, they got rich overnight, and then 2 nights later, they're back to being broke, right? Wealth, longevity, it takes time to create and build. And same thing with this finance walk. You have to take one step at a time, be willing to put the time that's necessary, be willing to put the education in that's necessary. You have to learn these things. It's not just going to fall out of the sky on you. And so to Tom's point, when you first get a mom and dad's house, it's probably gonna be a small apartment or a small house, a little bungalow that you start off with. But over time, if you make a game plan, you work with professionals, you learn, you educate yourself, and you're consistent with the activities that are necessary, you will graduate up to those bigger and better things. And you can shorten that time frame, and that's what these webinars are for. You can shorten that time frame with education. So Tom, I so much appreciate you taking the time out of your evening. Tell Lori, thank you. I'm sorry I stole you away for the evening, but I know for those who are on this webinar tonight and those that are going to watch this in the future, this is a great place to start. And if you really, you go back and if there's something that was kind of confusing, or you need to take some additional notes, go back and rewatch that part, and then go back and check with a bookkeeper, a CPA, other advisors, your mentors, and say, hey, what are you doing about this? How is this working for you? Or this is what I'm doing. Can you take a look at it and let me know if there's anything I could do better? That's how you're going to get your ability to grow your business into the best possible place. So again, appreciate you, Tom. Thank you, Malia. Thank you for being on and making sure that this went off without a hitch. Appreciate Mr. Cody Askins for jumping on and sharing this with all of the people that he has amazing influence with. I'm looking forward to seeing some of the comments. If you got something from this, share this with somebody else, whether they're brand new, been in the industry for a while. That's the biggest reward back to us, is knowing that this is making a difference in other individuals' businesses and lives. And let us know, whether it's a comment on YouTube, a social media comment, like if something about this helped, or if this changes something about your business, or just email us. Like, you get emails from us, you can just hit reply and say, hey, here's what just happened. Like, we love to hear those stories, and maybe at some point in time we bring you on and have you share how you're making this work, because people need to hear this from a couple of different angles in order to be able to get it for themselves. So with that, from Puerto Rico, Tom, from Asheville, or I'm sorry, you're not in Asheville right now, you're not at the office. You're in, I'll just say Western North Carolina. We don't have to, undisclosed location in Western North Carolina. Won't give your exact location, but we appreciate everyone who joined us from all over the country. And we look forward to the next webinar that we'll be doing on business analytics. And with that, have a great evening. Thanks, Tom.
Thank you.